Okay, so welcome everyone to another episode of the New Money Mastermind. Today I've got with me Ashton Addison from the CryptoCoinShow. So Ashton's joining us today from Vancouver. Appreciate your time, Ashton. And yeah, I reached out because I see the videos you put out on YouTube. You've been active for a couple of years now, I think 2-3 years. Putting out great content. And so just wanted to reach out as someone who's an influencer and obviously covering the crypto space to get your thoughts. So welcome to the show. Maybe you can just give us a quick sort of background. How you got into cryptos. We can take it from there.
Yeah, thanks for having me, Michael. I think I've been in crypto since the late 2013 spike when Bitcoin first went to $1,000, and a bunch of people started hearing about it. And I've always been in computers and tech, and also I've been studying finance. So sort of like a best of both worlds for me, combining finance and technology. And since then, started holding Bitcoin, and when Ethereum came out, we were very interested in the pre-ICO, and then it just sort of expanded from there. And then the industry's just blown up in the last year or two.
Mm-hmm.
So it's been pretty fun so far.
Very cool. Yeah, I think this year is really when the market's taken off. The broad market before this year it was pretty much just Bitcoin. It was 90% of the market cap, and everything else was very small. And now obviously Ethereum's taken off, so that's been huge growth. Must be a really exciting time to be in for you. In terms of you said you got in when it started, you started seeing it spike. That got your interest. Did you get burned on that? Is that something you weren't heavily involved in, so it was just like a learning experience for you, or what was taking me through that? How that was for you?
Well, thankfully I didn't get too burned because we sort of got in after on Bitcoin dropped in the beginning of 2014, and then everyone makes small mistakes as a trader when they first start. And, you just got to consider the lessons that you're learning for the small amount of Bitcoin or whatever kind of coins you may lose, right? So nobody's going to make money on their first trade. You're never going to be a millionaire.
Right.
And you really have to play trial and error with markets until you figure out what you're doing.
It's tuition. Yeah.
You learn like little losses along the way, and then you spike it big on a few altcoins or something when you do your research, and it all pays off in the end. So no regrets for any trades that I've made so far. Yeah.
Very cool. And you said you got it on the pre-ICO of Ethereum. What was the price at that time?
I believe it started at about 30 cents and then 60 cents.
Wow.
Yeah.
Yeah. So it's interesting because a lot of people in my community, obviously they've seen the similar spikes in Bitcoin and Ethereum. Some of them got in Ethereum, some of them didn't. Personally, I've been following it for a few years as well, but only really got into it this year seriously. So I was just kind of playing around with Bitcoin before, and then when I see the potential of the whole market taking off, I realized, okay, there's a huge growth trend here. My background's also in finance and economics, so I can see some of the macro trends going on, what's driving all the money into crypto, some of the problems we're having in the financial system and the banking system. So the real need for this trustless, decentralized, voluntary system that everyone can use without relying on central authorities and government and things like that. So a lot of my members, they look at Bitcoin and Ethereum that have obviously had huge growth. They think, oh, I've missed out. It's too late. So what I think, obviously, we're still very, very early stage in this game, and maybe you can share a bit about your thoughts about where we are now and where you see the market going in the next 2-3 years. Why people should really start paying attention now.
Definitely. You know what? Hindsight is always 20/20, and in perspective, say I throw back to summer of 2016 when the DAO got hacked in Ethereum, and on the charts at the time, the Ethereum, it went from $10 to $20 back to $10, and it looked like the end of the world. Like the chart was just freaking spiking, right? And then now you look back at Ethereum and you look for the DAO where the DAO got hacked, and it's like a small blip on the thing. Yeah, so it's it's all perspective, and just look at the market cap as a whole in the industry compared it to the American stock market. We're still at a decimal of a percentage of the size. So really, if you're getting in now, it's still good to time your entries, but it's likely that whatever you do in 5-10 years, it's still going to be exponentially higher, right? So
yeah, that's interesting. So
yeah,
a lot of people say Sorry, I was just going to say a lot of people say that Bitcoin and Ethereum's in a bubble, but then you look at the stock market, and the stock market, the global stock market is $50 trillion almost in that asset class. So you compare that to Bitcoin, which is like 100 billion, it's like nothing. It's like we're not even there when it started. So,
Yeah.
So when I say early stage, that's kind of what I mean. And then where you're looking ahead, 2, 3, 4 years, you obviously see this exponential growth continuing. Is there any sort of particular insights or in terms of you're following the markets where you think it's going to go? Just so we're going to keep 10xing every year, or obviously with a lot of volatility, but are you just following the basic trend and saying, okay, yeah, it's still very early? What are you kind of advice you're giving to your sort of community, your subscribers?
Yeah. Well, my advice would be, if look at what strategy you think is best for you, and a lot of the times, if you're unsure about what you're doing, buy and hold is never a bad decision.
Mm-hmm.
If you think that there might be some volatility, you could try to play the markets, but you have to understand that you have the risks of losing cryptocurrency, and then being worse off than you were before. But that's the risk that you take. So you have to look at your risk aversion. And same thing with Bitcoin, Ethereum, and then you move down into the smaller cap coins. I know you like to do like a 33% strategy where you hold main coins. Yep. And then smaller coins. Yeah, don't put all of your coins into some little coin that you're just hoping will go 100x, and then when it does nothing, then you
miss out on the broad market exposure. Yeah, that's really interesting. I think there's different strategies. We'll get into some of the investment strategies in a minute. There's ICOs, there's sort of junior altcoins. You can trade if you have the time. I say to a lot of people, but especially if you're new, just start educating yourself first of all. At least get into some Bitcoin and Ethereum, because from there you can obviously access all the other coins that you may want to move into. So, but the basic strategy I outlined is those 3 buckets. And in terms of like risk return, they're all different spectrums of risk return. So some of the safer coins, I say safe, because everything in this space is volatile. And I always tell everyone, don't use money you can't afford to lose. So that's the first sort of disclaimer I always put out there. But assuming you understand the risk and the returns of exponential growth, then this is why we're in the game. So that sort of first, third bucket I consider to be the most safe in terms of the most established coins. So Bitcoin, Ethereum, Dash, Monero, they all had big moves. I think they're going to do very well from here in terms of tracking the broad market, but they aren't necessarily going to have the huge gains from here, some of the junior coins. So I want some exposure here to kind of reduce my volatility if I'm a long-term buy and hold investor. If I'm not comfortable seeing my portfolio go up and down 30-40% in a day, then I want to have some in the safer coins. Then that second bucket is some of the more junior coins, some of the more speculative coins, which haven't had those big moves yet. So I kind of see these sort of waves of capital coming, where we've had the first wave, was Bitcoin. Now the second wave was sort of Ethereum, Dash, Monero, which happened this year, and the whole market really took off. And then the next wave is going to be the sort of coins following up behind that at the sort of infrastructure and application layer. Some of the tokens like Veritaseum and Populous that I'm following and recommending in my group, I think they're going to be huge because they're disrupting massive industries. There's just nothing else out there like it. So I say have some exposure in the first bucket, but the second bucket is where I see the biggest growth happening. Do you agree with that, or do you have a different strategy broadly?
Yeah, no, I definitely agree. I would say, it's definitely worth doing research on the coins that are, between the top 50 and 100 that are sort of like the little hidden gems that have the potential to do an easy, 10x, 20x, something like that. And it's definitely worth doing your research, but you do have to put the time in to doing that, because there's so many coins that you could be researching all day and only learn about, a few of them.
Sure. So. Do you have one particular coin you want to put as an example, maybe, and maybe how you researched it, why you like it, and maybe just kind of walk people through your thought process, because that would be quite useful, I think, to a lot of people.
Yeah. So, you always want to, before you get into like what the coin's doing, you always want to check, if there's a huge pre-mine and what the supply is. If there's a gazillion coins and a lot of people just say, oh, well, it's only like half a cent. So like it has a lot of potential because Bitcoin is, thousands. And then you look and there's like a gazillion coins. It's not going to go very much higher, right? Yep. So you really have to compare the market caps. For instance, I was just researching this Sys coin last night, which the market cap's about 50 million, 55 million. And they have a promising team. And they're coming out with this thing called the block market, which is like a decentralized market, like Open Bazaar. And it seems promising. And I could see, something like that, a $50 million market cap, could easily go to 500 million as all the smaller altcoins get pumped later this year. So something like that would be like a 10x potential, I would think.
Okay, so you're looking at that sort of category of rank in terms of rank and market cap between 50 and 100, the ones that haven't had the big moves yet, but you think have a lot of upside potentially. So that's interesting. I think, yeah, I try to avoid the ones that have obviously had a lot of upside already because it's a risky space. So if I'm going to risk money, I don't really care so much about, trying to be safe as much as other people might. But obviously, if you're more risk averse and you're new to cryptos, you've got to be careful just starting out to really educate yourself and understand yourself. What is the upside? Is it worth the risk? So I think we all have slightly different ways that we analyze the risk. So you mentioned Syscoin there. Is that one you like, and because of its potential to you think the market cap is still quite undervalued, or is there any other reasons, in terms of the dev team, the roadmap, the white paper, any other sort of stuff that you look at?
Well, I've talked to the dev team, and they're actually based in Vancouver as well. So like they've approached me and talked to me about their coin and stuff. And those guys, they seemed really dedicated to the project. But there's so many other projects with huge names backing them. For instance, Zcash. Those guys have huge names, and I just got some Zcash as well. And it's a little bit bigger market cap right now. It's about 100 million, but I still see the potential for that to go to $1 billion. Any giant project. I feel like Zcash and Ethereum, these guys, all the advisors like Vitalik and Zuku, they sort of like team up and say, okay, we're going to put our faces on this is the project, and everyone already believes in them, so
it adds a lot of credibility to the direction
automatically.
Okay.
So
and that's interesting.
You're almost putting it.
I was going to say
one thing I want to mention was I got this from this one guy I follow on YouTube, Amir. He really drills down on the fact that you have to look at the team that is behind the project rather than the technology or what they're planning on doing, right?
Sure.
You really have to invest in the people, not the tech, because those are the guys that are going to make it happen.
Exactly. And that's very key with the ICO as well, because you see some of the ICOs coming out now, and there's a lot of hype, and really there's not much product there. It's just some people coming together to try and raise cash. So even if they have experience, you've got to be skeptical. If this is like the third or the fourth coin they're launching, and the other ones haven't done much, you question why are they moving on to so many more coins. I think that's a big challenge for a lot of people. But you have ICOs like Tezos where they have sort of unlimited fundraising. It's more or less that banker bonus mentality where they want to cash out their coins. There's really no incentive for long-term value creation. So, one thing I look at with ICOs is, if the team's really incentivized, they lock up their tokens for a year and they actually focus on building the product. I mean, that's like a huge differentiator. It really shows they're trying to, show they have credibility and they're not just in it for that short-term pump and dump, which I think is becoming very common in the ICO space.
Yeah, it definitely, I feel like every ICO is sort of experimenting with the distribution and how they're doing the ICO, right? And like that's cool right now. It's good to try to figure out what works and what doesn't work. And some people have to make crazy ICO distribution methods that don't work, and that's cool because I learned from that and we move forward in the cryptocurrency industry, right? So it's good to have variety, but it's definitely a good idea to lock up your tokens as part of the team so that you bring long-term faith from the community.
Yeah, exactly. So do you I know you talk about ICOs a little bit. Is that sort of one of your investment strategies? And there's slightly different criteria when you're looking at ICOs. So we talked a bit about the team. In terms of how I analyze it, I tend to go for ICOs that are in the finance niche because that's kind of my background. So I really understand it a lot better than like other ICOs, which just don't make a lot of sense to me. And they may do well, but I'm not in, I can't invest with confidence, but I don't really understand it. So, I like obviously tokens like Veritasium, Populous, things that I really understand. Is there a particular niche that you focus on, or in terms of ICOs, how do you do your sort of selection criteria? Any websites you'd recommend, any courses that you follow?
Well, I always check the ICO countdown and the ICO alerts.com just to see if there's any new ones popping up. And I like to subscribe to the mail list, so that people can just send me information about new ICOs. However, more recently, I'm getting emails that are like, 2 ICOs today, 4 today.
So much noise. Today. Yeah, exactly. How do you cut that noise?
So many. Yeah. So, and the financial industry definitely hits the heart of the ICOs because, that's sort of what we're doing is trying to create that decentralized nature where we can reduce costs and make it faster. But at the same time, you have to see, okay, like say there's 50 ICOs that are doing finance, are 48 of them doing the same thing?
Right.
And like, if you invest in all 48, are they all going to do well, or are some going to, not do anything?
Mm-hmm.
So it's good to, like you would diversifying a stock portfolio, maybe have some tech stocks, have some energy stocks, other industries as well. So I would recommend probably the same strategy for me in ICOs to go into different industries.
That's interesting. That's interesting. I understand the point of diversification. I guess as long as you understand the sectors you're getting into, and the space is moving so fast, it's really hard to stay on top of some of this stuff. So the way I use ICOs is like one part of my portfolio. I'm not 100% into ICOs, so I already have diversification within my crypto portfolio between different assets and tokens and coins, and then ICO is just sort of one part of it. So that's why I really dig deep when I go into ICOs to something I already understand, and obviously the finance is just where my background is, just where I understand it best. So it's interesting how you can do it. I think some of the challenge right now is that you've seen some of the hacks come out, some of the multi-sig wallet vulnerabilities, ICOs getting emptied. I actually got into an ICO a couple of days ago. They had their account cleaned out by a white hat hacker. So someone who actually saw the the vulnerability and started alerting other ICOs to it. So I mean, I was just lucky in that sense that I was one of the good guys, found the vulnerability before one of the bad guys. Any sort of tips you share with people other than not using money you can't afford to lose when getting into this ICO game?
I would say always be conscious of, how much money you're putting in. And I find that it's really easy to overinvest, especially with all these ICOs, just because, say people bought Ethereum back when it was $10 and then now they made huge profits. People are more willing to throw a huge chunk of money into an ICO that they don't really know a lot about, sort of because like it was free money for them in the beginning, right? Totally. And they think, okay, well, the same thing will just happen. What Ethereum happened, I'll get a huge pump again. I might as well just chuck a bunch. So then, they'll chuck $5,000 or something, maybe that more than they're comfortable with into the ICO, just hoping, that it's going to strike gold without doing as much research. So it's always good to be due diligent in that sense.
And in terms of like tracking ICOs, because there's different entry and exit points. If you're looking as an investor or a trader, obviously you can get in pre-ICO. That's the best if you really understand the coin, you believe in it, and then you might look to cash out your investment when it goes, ICO stage or post-ICO on an exchange. Do you have a sort of strategy that you favor, or how many coins you follow at once? Because for me, I find it so overwhelming just to first of all shortlist, and then even the potential ones I like, there's just too many. So how many sort of ICOs do you hold at once? Do you hold them long term, just forget about them, or do you sort of flip them as they go through the exchange and through that life cycle? What's your sort of strategy on that?
I would say I wouldn't hold more than 10 because it's just so much to look after, and you can only put so many alerts on your devices to tell you what's going on. And at the same time, you have to keep in mind that the cryptocurrency is always 24 hours, so you could go to sleep and
24 hours.
While you're sleeping, something happens in China and you wake up and you're down 100%. So it's always a good thing as well, keep your orders in for what your decisions are, just tentatively, in case there is a spike, because the cryptocurrency moves so fast that the spike can happen in 10 minutes. It's already, it 2x'd and then it's back to what it was at. And you would have sold if you would have had your orders in, if you would have checked the level. But if you just leave your coins sitting there and with no orders, then you can miss a lot of opportunities. So always prepare yourself in advance.
Yeah, I definitely say that's a good strategy for the more advanced people out there who have a bit more time and energy to really look at the markets, look at the charts, and take advantage of that volatility. So, you mentioned you put orders in there. Is that on like Ether Delta, like a decentralized exchange, or is that on Bittrex? How do you set that up? What does that look like? And you mentioned the alerts that you set up. Is there any sort of platforms or like tools that you recommend?
Yeah. So mainly right now I've been using Poloniex and Bittrex just because Poloniex has pretty much the most volume out of most of the exchanges. And so it's always good to go on CoinMarketCap, look at the coins, look at the market, and look at the top liquidity provider, right? Because that's where you're going to get the most volume, and that's where the most spikes are going to be. And then as well, Bittrex, just because there are other coins that are on there that aren't listed on Poloniex that I want to get into as well. I haven't dabbled too much with the decentralized exchanges right now. And speaking of Ether Delta, I did see some phishing websites just a couple days ago that
Really?
somebody had tried. There's so many scams going on right now in cryptocurrency
Mm-hmm.
since the a month or two ago when the My Ether wallet phishing scams came out, and then now
Copycats.
because I'm following all these ICOs, yeah, probably 20 to 25 different communities
Wow.
separately are all being pushed into scams,
Mm.
and you just have to not just expect every single link is a scam. Just don't click anything, because a
Extreme
lot of people
paranoia.
lost,
Yeah.
for sure,
Yeah.
people lost money just logging into their accounts thinking that they were on the right
Mm.
exchange, and sure enough, it was a phishing site. So it's, you'd think that people in cryptocurrency are at least sort of knowledgeable in being conscious on what they're clicking on the internet.
Mm-hmm.
But with the amount of adoption that we've seen recently, we just always got to keep look out for each other, right?
Totally, totally. Yeah, I mean, it's interesting because I use a password remember. It's like a plugin for Chrome called LastPass. So,
Yep.
if I go to a website and it's not the same website, it won't recognize that. So that just kind of protects me as one
True.
idea. But obviously, LastPass could get hacked. Anything could happen. But I've been using that for years, and it's just one thing that kind of saves me. If there's a phishing website, the URL will be slightly different, and it won't get registered by my software. My password store plugin. So that's one thing. But obviously, not clicking on links that you don't know who they're coming from. Yeah, it's crazy. I mean, you even get like ICOs where the hackers are hacking into the websites, just replace that Ethereum address, and then all the money's being diverted off to another. So you could be on a legitimate website, but the website itself
Yeah.
got hacked, and so there's a lot of different scams going on. I would say that the FOMO is the main reason people rush without doing the research. So
Yeah.
I think there was an ICO. InsureX went live recently, and like hours before it got hacked, and they took over the website. I think took over the Twitter as well, and basically sent a message out saying, we've launched early, get in now. And because there was so much FOMO, people didn't think twice. They thought, if I don't do it now, I'm going to get locked out, just like some of the previous ICOs that set out in minutes. So it's like that FOMO just
Yeah.
kind of it overwhelms your sort of rational senses, and then you just send your money, and then you're like, oh shit, I got scammed. So it's
Yeah.
definitely letting emotion kind of control you. Stuff like that, it should really trigger your red flag.
Yeah. Emotional decisions never work out, right? You always have to base your decisions, especially when you're watching an altcoin or Bitcoin and it's going down in price, and then you're so tempted to just sell at the bottom, and wouldn't you know, right after you sell, it goes right back up, right? And that's what they're hoping, right? You almost have to have that opposite mentality where if there's fear, that's when you should be greedy and be buying, and when everyone's happy, that's when you should be selling. So uh, I always try to, before you make a trade decision, it's good to pull back on the charts, look at the 1 day and the 1 week and see where you are in perspective. Stop looking at the 1 hour chart, because, you could be way up and it's actually, in a few weeks, it's going to retrace down to a lower level, but you're looking at the 1 hour chart and you just don't see these things, right? So it's good to pull back.
Yeah, definitely to get a view of the long-term perspective, different time frames. The daily and the weekly charts really give you that perspective of where the coin is for long-term positions. Unless you're trading, like day trading, the 5-minute chart and the hour chart are useful, but otherwise you can get a wrong perspective and kind of miss the bigger picture. So, so do you do much trading yourself, or in terms of your strategy, do you have a lot of time for that? I used to do it, but I just don't have time anymore because I'm running this community and doing lots of other things. So I don't enjoy being on my screen all day long either. So I like to get out there a little bit, have a more balanced life. So how do you manage that with your time?
Yeah. Well, I do, trading day to day, week to week. It's more, what's good this week, hold on, and then I'll just put in your trackers. One thing I have used is the Blockfolio application on mobile, and just to set alerts and to see what your coins are at. And then, if you're waiting for a 2x, as I said, I like to put my orders in so ahead of time, so that when it exercises, then I don't have to do anything.
Right.
I just don't
frees
have
up that mental energy to have to be tracking it. Yeah.
For sure. Yeah. There's just so many other news and the CryptoCoinShow and event chain and stuff that I just don't have time to try to buy new coins every day. Yeah. So if you just have to have a balance in life, as you said, right?
Yeah, it's a tricky one because there's so much shiny toys and always new things coming in. The space is moving so quick, and that's kind of why I started this investment community for my members, because they're all really busy people. They don't have time to follow the market as much as I do, so I can kind of distill that and take out some of the noise and make that more useful picture of the markets. And I'm sure that's what you're doing for your members as well. So let's talk about Bitcoin this week. I guess that's the most current topic. They've got this fork coming up. I'm not the most technical person, so I kind of try and take a step back and say, okay, what's the worst that could happen? I'm obviously in it for the long haul. I see Bitcoin's got tremendous potential. It's still the number one by market cap, still the most secure network in terms of the mining power that's securing the network. So that's where its value comes from. That's its sort of use case, utility value. People are freaking out because of this Bitcoin fork, what it means. What do you think it means, and how are you sort of dealing with it? What's your strategy for this week and the next few weeks, maybe?
Well, there's a lot of confusion going on because of the the potential split of the coin, and they're saying that some exchanges might honor this other coin they're calling it Bitcoin Cash right now.
Yep.
So that might be the the second Bitcoin, but I'm not too worried about it. A lot of people are saying that the BIP 91 implementation and the SegWit is all just gonna be accepted just fine. And I feel like the market's almost caking that price in days before August 1st, like coming up here. And we did see Bitcoin down to 1,800. Was it last week? And then there were sort of some announcements on the scaling debate just after that, and it astonishingly went up to 2,700.
Shut back
That's
up.
almost $1,000 increase, and it took to get to $1,000. Beginning of 2017, that almost took 4 years back from 2013. So it's astonishing to see $1,000 price increase in a week or a couple days. But personally, I would say I would watch the market for drop down. And, as I said, when people are fearing, that's the time to buy. So if you see Bitcoin go down, I would buy on a dip after this implementation, and just watch out, with the confirmations and the transaction fees, maybe increase the fees just to play it safe so you don't lose your Bitcoin in the crypto sphere. But I would say, it's, I'm excited. When there's fear,
it's opportunity.
It's time to buy.
Yeah, exactly. I think people look too short term and don't really see the bigger picture. So one thing I follow is also volume, because volume confirms price in the markets. If you look where we are now, obviously, like you said, all the exchanges, people are not sure if they're going to honor the Bitcoin, so people are obviously withdrawing their Bitcoins. You see liquidity is drying up a little bit. The volume is really, really low at the moment, so there's a lot of that uncertainty playing in. I think when you see volume so low, that's when you get really extreme price moves. That's when flash crashes happen in the stock markets, when there's just no liquidity, no volume. So I think we're kind of getting to that sort of period of days and weeks leading up, even maybe after, where there's still some uncertainty, where there's massive opportunity, because you could easily see another 20-30% sell-off. I wouldn't be surprised at all to see that. And obviously, if you have your buy orders in, then you can accumulate very cheaply, and that's what we try to do as investors. We try and see where it's undervalued, short term, where the sort of fear is playing into the markets, and take advantage of that. So it sounds like you have sort of similar strategy in terms of waiting. Are you taking your Bitcoins off the exchanges? Are you converting out and hedging with Litecoin? Any sort of strategies of dealing with this uncertainty besides trying to capture the downside?
Yeah, definitely. Just as we saw with the BTCE exchange, they're down because apparently, the people are involved with the Mt. Gox from 2013. I'm not sure if those people that had their coins on BTCE are ever going to get them back, right? So same thing. It could happen. Same thing with Poloniex and Bittrex. If you have your coins on exchange, then you don't own the private keys. And if the exchange goes down or gets hacked, then the coins are not going to be there when you get back. So I'd always recommend, what I have here is this is just one Trezor that I have.
Nice.
Nowadays, the Trezor supports Bitcoin, Ethereum, all the ERC20 tokens, Litecoin,
nice.
Zcash. So you need to have a hardware wallet. Yeah, if you're going to hold coins for more than a few months, they're like $100. Just get a hardware wallet. There's the Trezor one or the Ledger one, or if you want, you can try doing paper wallets. But it's just best to not keep your Bitcoin on the exchange if you're not trading it, right? If you're going to trade it for altcoins, then for sure you need it on there because it's a pain to transfer in and out. But definitely don't leave your coins sitting on the exchange. And yes, as well, I did get some Litecoin a couple months ago, like just to help diversify. And I know that Litecoin seems really promising. I did a video on it back in May when it was 10 micro Bitcoin, and now we're up to like almost 20.
Wow, nice.
Yeah, and it's because it's implemented SegWit just fine. And I could see when this market blows up, right now it's sitting at 2 billion market cap or less. And I would think that if Bitcoin is over 100 billion, then it will be. I could easily see it at 10 billion. So it's a 5x potential, or to 20 billion. So I don't think that it's gonna die. And people also use it as a safe haven. It's like the silver to Bitcoin's gold, right? So it's good to diversify.
Yeah, absolutely. So I think Litecoin obviously would benefit from any uncertainty or any kind of disaster in terms of Bitcoin. If the fork doesn't go as planned, Litecoin can only benefit from that. So it's definitely good to have some of that as a hedge. With Bitcoin, it's kind of interesting. I think it hasn't had the upside. It's not going to have the upside from here. Some of the junior coins. So personally, I don't hold Bitcoin, but Bitcoin obviously affects the market because it's the largest by market cap. So, we talked about that a little bit. Obviously, Bitcoin's number 1, Ethereum's number 2, Ripple's number 3, and Litecoin's just behind there, number 4. So I kind of think that Litecoin will definitely overtake Ripple at some point. It just seems to be that's inevitable. I really don't see a lot of value in Ripple. Fundamentally, it's one of those really old coins. Do you have a view on Ripple in terms of does it affect the market? Do you hold it? What do you think of it?
I held Ripple, when it was like a cent and like as it got pumped to the big numbers right before Ethereum got pumped, and I saw that one coming. I was looking at the charts. I saw Bitcoin number 1, Ripple's number 2, Ethereum was number 3, and I was like, this just isn't right. Like Ethereum is going to switch with Ripple, and it did. And before that happened, I just got rid of the Ripple that I had. So I'm not in it right now. And I know there's sort of like a philosophical controversy with Ripple with some people that are libertarians in the crypto sphere because it's the bank coin. Like it's used before banks, and so it's sort of like it's fun to make jabs at Ripple. Rest in peace Ripple at that point. But I'm not holding it right now, and I'm just gonna wait on that one to see where it goes because at the 7-8 billion market cap, I wouldn't, the upside potential isn't as good as the downside potential in that case. So I'm going to hold out on Ripple for now.
Okay, that's interesting. And, coming back to what we said earlier about the use case, utility value, you said if you're investing in 48 different finance coins, are you really diversified? So kind of the way I look at this as well in terms of projects and coins is to look at, what's the barrier to entry into a market? So that kind of determines, how much the value of that coin could have. It's a very saturated market, easily crowded. Like the payment space right now, I feel it's super, super crowded. I'm very reluctant to invest in new payment coins because they're all essentially doing very similar things. Hard to say who's going to take all or how that market's going to play out. I guess Litecoin and Dash also kind of fall into that payment space. Do you have a favorite between Litecoin and Dash? They're a little bit different. Maybe you can give us your thoughts on that, and then I'll obviously comment as well.
Yeah. Litecoin looks really promising, but Dash as well. Props to them because they really know how to build a community and do marketing. And those guys, sort of like Amanda Johnson's like one of the marketing faces of Dash, and I think they've like really done a good job growing the community from that perspective. And I would say they're probably one of the leaders in the crypto community for putting out content and keeping in contact with their members and everything like that. So I do like them a lot. And I was unsure. It was funny because Dash was one of the first coins to start pumping. I think it was before Ethereum as well. And everyone thought that it was just a little bubble and it was going to crash back down. And that's sort of when it didn't. That sort of started the cascading effect, and all the coins started pumping. And that's one of the lessons that some people learned in Dash was don't think that it's a guaranteed short because I think that one guy put like $500,000 shorting Dash, and then it doubled in price, and he learned the hard way.
Well, yeah, I can't believe people short cryptos at all. I mean, you're an exponential growth in a sector that's have crazy growth. You're just taking crazy risk. The risk is against you completely. Whereas obviously buying it, you have asymmetric risk because the downside is your original stake. But if it goes 10x or 100x, that just makes sense. So
Yeah,
I never short cryptos. I'm not that smart. I don't know anyone who's that smart unless you're a whale and you're manipulating the market. That you can do that kind of stuff. But for normal traders and investors, I think that's pretty scary. Pretty scary way to play the markets. So I mentioned Dash because
definitely.
I find Dash really interesting for a couple of reasons. We've seen the original sort of coins come out like Bitcoin and Litecoin based on proof of work consensus. Where there's miners securing the networks, the miners are in the block rewards, the miners getting paid, and that's going to be in the conventional way it's been done for a while. And now we have sort of proof of stake coming out, more and more coins moving to proof of stake. Dash is kind of a hybrid because it's still the proof of work, but they kind of reward these masternodes essentially, which are people sort of hosting a copy of the blockchain on the network. Also securing the network, providing value to the network and getting rewards for that. So it's kind of a split model where miners get half the rewards and the sort of holders of these masternodes get also some rewards. This is very interesting for me in terms of like supply and demand and basic sort of economic, fundamentals because if you check right now, the amount of coins in circulation publicly on Dash, there's almost 60% of the circulating supply is locked up in masternodes. And what this does is it effectively takes a huge chunk of supply, restricts supply on the market, and obviously it disincentivizes selling. Whereas if you are a miner, you almost have to sell because you need to fund your operations. You have costs in the real world. You have, hardware, labor, electricity, all this kind of stuff, and you need to fund that. So I feel
Yeah,
like proof of work kind of incentivizes people to sell, and also you don't have any other upside. It's just capital appreciation. You're just trying to make money on the gains. Whereas with proof of stake, you can hold those coins, and it almost becomes like a rental yield vehicle for you, almost like a traditional investment where you hold the coin, especially if it appreciates in value. You're earning interest on those coins, so it disincentivizes selling and also locks up supply in the masternodes. I feel like that's a really powerful trend to think about because I think more coins are doing that. You're seeing obviously lots of forks of Dash, like PivX and some other coins, trying to take advantage of that model and that growth that Dash has had. Do you have any thoughts on that? How you kind of play this growth in the masternodes and proof of stake world versus proof of work?
Mm-hmm. Yeah, I recently was researching, did a video on PivX, and I was looking at the comparison for the masternodes, and is it profitable? It depends on what your strategy is, right? Are you holding the coins because you want the price to go up? Are you holding the coins and staking them because you want like a safer return?
Mm-hmm.
And in the case of PivX, which is just a fork of Dash, yeah, it seemed like if you don't have a masternode, then it just isn't worth it to stake anything. But if you're just holding the coins anyway, it's almost just like putting it in the bank and then they're giving you like a decent interest rate and it's sort of safe.
Mm-hmm.
But a lot of people right now, with Dash, I believe you need 1,000 Dash to
Coins. Yeah.
be a masternode. And like when it was like $17, I was like, okay, like I could have a masternode. Like it's only like 17,000,
Mm-hmm.
and then now it's like, holy cow, like it's like
200,000.
$100,000,
Yeah.
$1,000 masternode. It's not really viable, and I just don't have the time to invest in that. And then you look at the other potentials of the other small coins
Right.
doing 5x, 10x, and it's like go to where the money is if that's what your goal is.
Right. So it's almost trying to identify the next Dash because obviously Dash had its big run. I think I looked at the numbers. You can earn about 8% interest if you buy a Dash Masternode today, but obviously it takes a lot of capital. So most people are not going to put 200,000 into one single coin. To balance your portfolio, it's quite extreme. So is there any other sort of forks or other Masternode coins you like? You mentioned PivX. Is that a coin you like, or any other ones you're looking at? And how do you kind of analyze that in terms of deciding which ones to go for?
Yeah. Right now, I just holding PivX, and I don't have any Dash anymore. But I'm not looking into too many other POS coins right now. But it's, as I said, you go back to, does it have a good team and all these other things as well. And
Mm-hmm.
I just have to look at all of that together.
And it looks like PivX has a pretty good team in terms of their dev team and their roadmap. A lot of people coming over from the Dash side. So is that sort of why you're confident in them? Are they doing anything really different than Dash that makes you confident in their future, or what differentiates them from Dash essentially?
Pardon? Sorry, you cut out there.
Sorry about that. I think my internet's a little bit slow. Is that better? Can you hear me now? Hey, Ashton, you there? Okay, let's see what happened here.
The pivots, they had this good team and good marketing, or is it just a little portion of that, or is it just the whales that are controlling the cryptocurrency industry? Did they just say, okay, well, it's time for Dash because we've accumulated a bunch of Dash, we're going to start pumping it, and you have to look at that correlation between. I like to make the contrast between the correlation of the prices in cryptocurrency and how the companies are doing, and then compare that to the stock market and how the company is doing in the stock market, and you can see that there's a higher correlation to what the companies are doing. However, in cryptocurrency, the company could do nothing and
Right.
the price could get pumped just because traders thought, okay, it's this time, this coin is the next coin, right? And it doesn't have to have any backing on it whatsoever or a team. Is if people see the coin pumping on the market, it's up 50%, it has potential. It could just be big traders deceiving people, making it seem like buy in this one, and then when it pumps, the big traders get out right away at the top. So I do look at that on these small caps as well, because they can get pushed up and dumped, and there's nothing that the team can do about it, because the market sort of controls the price and demand, right?
Right, right. Okay, you cut out a little bit there, but I kind of caught the gist of what you were saying. In terms of the fundamentals don't necessarily apply in crypto world because things move so fast. The volumes of market caps are so small that any kind of whales can drive the price and move it up and down. So you do see some market manipulation there. Is there certain coins you stay away from, or how do you kind of see when that manipulation is happening versus just general momentum and greed in the market?
I think all the coins sort of, if you just see certain coins they're up 100%, 200%, and then there's coins that they're down. If whenever I see coins up, nowadays I just think, okay, well, it's already up.
I'm gonna wait for that one to come down.
Yeah, don't buy it if it's already up 50%, because some coins, it goes up 50% and then it'll continue to 200%. But you really, really have to watch the timing. You could buy it and it could drop right away, right? And yeah, I don't think, POS versus POW really makes a difference in that sense of, are you going to make the pump or not? If that's your goal, it's almost just arbitrary.
Okay, that's interesting. I think for me, masternodes is a sort of newer strategy I'm looking at because I see obviously the growth of Dash. PivX is obviously taking off. It's now 20,000 for a PivX masternode roughly. So if you think it's going to do the same thing as Dash, then obviously now is a good time to buy. There's even some cheaper ones which are more early stage masternode coins, which cost maybe 10,000, 5,000, even a couple $100. Some of the new ones. So yeah, they're not, the price is not always tied to the value in terms of the fundamentals, and that's where it's really hard to work out where should you allocate, because something might look cheap and you could be completely wrong and it could still pump. And so there's just that short-term kind of momentum is crazy, especially with the very low cap coins. That's one of the strategies I'm actually looking at now, is to kind of say, anything in the 500 or below rank where the market cap is just tiny, where the milestone maybe costs a few $100s. If the whole trend is going to grow and take off, then I might just put a bit of money in there. And it's, you can call it gambling or whatever, but getting some exposure to the really low end, the really cheap shit coins or whatever you want to call them in the market that will all do really well. And then when the broad market goes up, they could do really well. I just went to this talk yesterday in London about this coin called Pepe coin. Have you heard of this one?
Pepe coin, yeah. I have heard about it, and I was at a meeting in Vancouver here like last week, and there was a bunch of Pepe coin stuff. So it's funny to see that.
It's the most ridiculous thing that on the surface, it is some meme coin can suddenly have so much value, and the use case utility value is not very immediate. But obviously, there's a community there. They're engaged. They love the coin. They're holding it, and so that kind of demand just creates a market, and it's yeah, it's very funny. I think it's
it's funny. It's sort of like Dogecoin. Where it's like there's some fun in there, but then it's like the next level, like super extreme. And and I'm sure that in 5 years when there's even more coins, then Pepe coin won't seem as extreme, and there'll probably be who the heck knows, whatever else coin that just doesn't make any sense at all, but people are just willing to try that. So, and that who knows, there'll probably be a community around these crazy coins in the future. So
Right, right. And I even think that, you get some coins which, like you say, have no real fundamental value, but suddenly a bunch of money flows in, now incentivizes the developers to take it seriously, and they can actually start to create value. So these things can kind of happen in reverse, where, they suddenly, oh, this coin's worth a lot of money, let's do something with it. So it can be, yeah, it can be very irrational in that way.
Yeah, totally. Even like Dogecoin, nowadays they're trying to do like interledger protocols between Dogecoin and Ethereum and Ripple. So, that sounds like promising. It's not just a meme. They actually will be able to do it like on the Ethereum blockchain. You can transfer into Dogecoin and back with like it doesn't even, you don't have to be online. So it's pretty crazy
Wow, I
that
haven't
they've
heard of
got to
that
that
one.
point.
What's the upgrade called? That's for Dogecoin, is it?
Yeah, it's Doge Ethereum, ILP, which is interledger protocol.
Mm-hmm.
So you can sort of use the ledger can transfer back and forth between these coins, which is pretty cool. So that, it hasn't, that's still in the works, but that sounds like an upside for Dogecoin in long term.
Yeah, absolutely. I think the whole decentralization of the coins and the exchanges is the next sort of big growth for the market, because we see the exchanges are the bottleneck right now. So in terms of liquidity, when you want to go buy Bitcoin during a big market surge, Coinbase is down, you can't even get into your account. So a lot of people just get locked out of the market like that. And obviously the exchanges are the bottleneck because they can't grow fast enough. This is 10x growth happening every year, right? They just can't keep up. So you're seeing them struggle. I think that's inevitable, that the next evolution in terms of the marketplace will be decentralization in the actual exchange level. Are there any sort of projects you're looking at that from that level? Anything exciting you're seeing, or is it still too early to say where it's going to go?
Yeah, I've been looking into decentralized exchanges a little bit. I know, even just basic things like Shapeshift come in handy. And the guys from NVO Exchange just did an ICO on Counterparty, and they're doing a decentralized exchange as well. So myself, I still have to do a little bit more research into the decentralized exchanges, because I'm still using, Poloniex and Bittrex mainly, just because that's where the liquidity is. So, but I think as we transition, then there'll definitely be more decentralized exchanges, and people will be able to hold on to their coins more and not have to rely on these centralized parties.
Mm-hmm, mm-hmm. And it also reduces some of the risk. I use Ether Delta, I mentioned that earlier, as a decentralized exchange. So you basically connect your MyEther wallet account, and you can load your tokens onto there. You can trade them, directly on that exchange. So you're not holding it with Ether Delta. You still hold it in your wallet, but you just use that to trade. So I kind of like that for a couple of reasons. One is there's less third-party risk, but also, before a coin, after a coin goes ICO, is usually a period of time before it goes onto a major exchange like Bittrex, and you get the big volume and the big pump and dump. So if you still want to accumulate, you missed out on the ICO, but you think it's a really good project, you can, you go into MyEther Delta, again, wait for a retrace. 40-50% is very common. It's still very, very early stage in the life cycle of that coin, and that's a good opportunity to buy in before it hits a major exchange and you get a big pump and maybe you get priced out. So that's kind of how I use it.
Cool. Yeah. No, that's I haven't used Ether Delta yet, but I'm definitely going to use it in a short time here.
Yeah. There's Veritasium is on there, Populus is on there, a couple of tokens that are not on major exchanges yet. No one knows when they're going to get listed, but it just gives you a chance to get in early. If you miss the ICO. So I try always to get in pre-ICO, but I don't catch everything, and so I still I use Ether Delta to kind of get some exposure. So Populus I missed out. They sold out during pre-ICO, right? They had just massive demand, got bought up, couldn't even get it. There was no ICO, so I waited for it to go on Ether Delta, and then waited for a pullback. And it's very interesting because I think it went from when it hit the exchanges, it went from $1 to $10, and then it shot back down to $2. So again, you just have massive volatility. Is why you should never chase the move. When a coin is that early and that new, you'll always get this huge volatility spike. And then you can wait for it to correct 80-90% sometimes when it's that early stage, and that's always at least you've hedged against that downside. But when you're chasing a little, you have no idea where it's going to stop and when it's going to turn on.
For sure. Yeah, and you really just have to look at your point of entry, right? Because as you said, it was $1, $2, or $10, then back to $2. So think of all those people that they sold at $3, and they're like, oh yeah, they bought it, or 3 to 10, and then now if you held, they're actually down in price, right? So you just have to really time your entry. And make sure you're at the very beginning, or that it's not going to retrace, and it's hard as well with those coins that have just come out. You can't look at the day chart or the week chart, right? Because
the data's not there.
There's no chart, and anything could happen, right? So you really just have to see. Usually the coin will start dipping below ICO price or down there, see where the support is, and buy and speculate just hope that it pumps.
Yeah, and you know one reason I hold a coin like Populous is because, you know, even if I miss the pump and dump and I am down, I'm holding that coin for the long term because I've done the research. I'm not just trying to flip it. So I think it's really important that if your strategy is to pump and is to flip it, then you really need to be looking at the charts. You're a lot more closer to your computer all day because you're waiting for that pump and dump. If you don't have the confidence to hold it, you know, that's a very different strategy. So I try and, again, obviously wait till it's had a good retrace. But even if it goes down further, I'm still okay because long term I see the value of this coin is gonna, you know, it's gonna take off. They're very close to actually getting an alpha live where they're actually getting invoice sellers to list their invoices on the platform. So it's basically you earn some yield from that because you're a token holder. So one of the sort of strategies I look at with coins is I want to earn something from it. I don't want to have to sell it, and that's why I mentioned proof of stake before. Just going back quickly to masternodes, you know, you get rewarded for securing the network, but there's also some coins which, because of the use case and utility value of what the network is doing, you earn additional sort of rewards. So one example is there's a coin just come out called Wager, and it's like a betting blockchain. So, you know, as a masternode, you're earning not just from securing the network, but also additional rewards from any betting going on the network. And so I always look for something like that that's got extra rewards, extra, you know, utility value, because I think there's more value there. So the marketplace is not so crowded, there's a higher barrier to entry, and I'm getting more, you know, return for my risk. So that, do you have any sort of strategy like that in terms of how you evaluate masternodes, or sort of, you know, yielding coins and earning an interest? Is that a strategy you're looking at, or you're still fairly agnostic between the two, proof of work, proof of stake concepts?
Yeah, I think that, you know, a lot we're the most it's most lucrative to play the markets itself, and I'm not, you know, staking any coins or anything like that. And it's good to have, you know, for people to stake coins, to be invested in these projects so that they know people are holding coins long term, putting dedication into helping grow the network behind the project. But for myself, I mainly just, you know, hold the coins. If there's staking, I might stake, but rather I'm just watching the markets and hoping that, you know, the dev team can do some good things and make the coin appreciate.
Okay. Yeah, I think especially if you're in this full time, you have more energy and time to dedicate to that research and really understanding, and also maybe trading in and out of positions. Where if you're more of a long-term passive investor, you know, you want to be earning a yield. Maybe you just want to have something you can sit there and not have to watch it too much, and not just have to sell it, because obviously, you know, that's not ideal to have to sell it and then again figure out what to do with it. So that's kind of what I'm trying to do with masternodes now. Is one of the strategies helping my members really understand where the next dash could be. And, you know, I watched a video recently where, I think it was Amanda Johnson. She was talking about, you know, buying a Dash masternode, and this was like from a year ago, and she was saying, you know, for just 7,000 you can have a Dash masternode, and I was like, oh wait, that was only a year ago, and the price was like $7 a Dash. So the return is one thing, but when you have capital appreciation and that, you know, crazy growth, basically today you're earning, you know, almost $1,000, $1,300 a month on the initial 7,000 investment a year ago. So those kind of returns month on month on month, you're never going to sell that Dash. You only put 7,000 in. If you can do that again with the next generation Dash like PivX or something else, I think that's just massive in terms of like a vehicle for returning, you know, value to you, and with relatively small investment. I mean, to get $1,800, $2,000 a month in conventional investments like property, you'd have you looking at like $500,000 or something ridiculous, you know, to get that kind of return, because there's no yield in the markets these days. So that's kind of where I'm looking at it from. Is like, it is very attractive, you know, for the future upside as well.
Yeah, it's like a self-fulfilling prophecy, right? You buy your masternode, put your, you know, get all your coins in there, and then when it pumps, then you're making a percentage on that future value. You know, because the Dash went like what was it, like 15x or something like that. So it's just great. And it's almost like a double win. You get the appreciation, plus you get the return on the staking of the future value once it pumps. So yeah, I'm looking into PivX, doing a masternode on PivX as well, because it is a little bit cheaper, I believe, than Dash right now to do that. So that's worth looking into for a lot of people, I think.
I'm actually putting together like a milestone evaluation sheet. I'll maybe I'll send you a copy afterwards. You can take a look, but it's basically working out, you know, comparative values. So obviously Dash had a huge pump. It's got a lot of premium built into it. It's had a lot of growth and upside. If you take into account the actual price of the coin and then the circulating supply, you can kind of work out what the, you know, relative price of that coin is, and you can kind of compare them. Obviously, PivX looks super cheap compared to Dash. So it's really interesting to see what is the next Dash could be, and just kind of, you know, hedging your bets. Maybe get 4 or 5 different masternodes if the price is, you know, is where they are today, is 1,000, 5,000, 10,000, then obviously putting something like Dash. So yeah, so that's my strategy for masternodes. I'm just conscious of your time. Do you have a bit more time, or would you anything
Yeah, I
else?
got a little.
Okay, great there. So maybe you can just share, like maybe sort of 3-5 years from now, what do you see? Where do you see the market? Is there ever going to be a bubble? Ever time to sell? What's your view on the market? Where it's going to go from here?
Yeah. Well, I would say we're definitely going to be up. But you have to look at the market cycles, and I think that the market sort of moves in Elliott waves and like Fibonacci retracements and stuff like that. And with the amount of increase that we've had just this year since January, things can't go up forever, and there's going to be pullbacks. Just like in 2013, it went to 1,000, and then it went back to almost like 100 or 200 bucks, right? So it almost went back retraced the whole way, and that's bound to happen. But you just have to look at it as opportunities to pick up more, and as only risk, as much as you are willing to. But I would say I could see Bitcoin, 5,000 just at the end of this year. And we may get to 10,000, 15,000, but expect that there will be some crazy volatility. We may drop 2,000 to 3,000 in a day, and we only got to 3,000 right now. But that's if you could, as I said, you could play the markets, you could try and short, or you could just hold Bitcoin and know that you bought it when it was $2,000 and you're at 10,000, and don't worry if it retraces, because it's going to get pumped back up after that again. So it just depends if you want to, make extra moves and play the market, or just hold it long term and just look at the market cap overall in the cryptocurrency industry, and see, okay, well, we're almost back at 100 billion. I could see by next couple of years, maybe we'll be at $1 trillion.
Okay, yeah, that's interesting. I think what I'm projecting, or what I'm seeing, is the sort of 10x exponential growth. So if you take where the market is today, it's 100 billion. Obviously, you're going to get volatility. We've seen the last couple of months. I think the market cap peaked at 114 billion. It sold off to 67. That's basically a 50% correction, right? So you're going to get those kind of corrections within any big exponential move. It could be even more extreme than that. So the key is not to chase the top. Wait for the 30, 40, 50% correction to start accumulating. And if you're in it for the long term, you're not going to worry too much about the volatility. You're not putting all your capital at risk. You're just using a small percentage. You can still get plenty of exposure to the sort of general growth trend. Do you have any views on how cryptos in general, the market cap is affected by the sort of financial world, the fiat world, and the US dollar? Because the way I'm looking at it, obviously things are not so certain how things are looking in 5-10 years. There's a lot of changes geopolitically, economically. So I think that just that amount of capital looking for a home is what's going to drive cryptos, exponentially. That's what we're seeing. It's a more efficient way of doing business and transferring energy, essentially, as well, because it's instant. There's no middlemen taking fees, all that kind of stuff. But just fundamentally, the current system is really struggling under the debt, under the politics. And so, do you have any views on how that will affect the markets in a good or bad way in terms of regulation potentially and things like that?
Yeah, definitely. I feel that a lot of people in the cryptocurrency industry, they already are waking up to the fact that these centralized economies that are just printing fiat money are really not providing any value at all to people. And I think that people in America, even if they are like in favor of the American dollar at first, they can see other countries like Venezuela, Brazil, and these other countries that when they start going through economic crises, then those people that live there, all of a sudden they're buying Bitcoin and other cryptocurrencies as a safe haven, almost like an alternative to gold, silver. And it doesn't. I think the smart Americans will start waking up and say, okay, well, these people in South America, now they're buying Bitcoin because the economy's struggling, and then people in Asia are buying it because the economy's struggling. And, I feel like maybe the economy might be struggling a little bit in America, so maybe I better start following the lead. And I think that, year upon year, more people will be waking up, and some people are just in the cryptocurrency because they see it on the news that it's spiking in price, and they're just looking for like a quick dollar. But some people are looking further than that and saying, okay, well, maybe the dollars that I have right now aren't really worth so much.
Right, exactly. And the Canadian dollar as well is not the most stable currency at the moment, in terms of, what's backing it and all that kind of stuff. So I think all the economies are struggling with the debt, with, the amount of government that's making up GDP. There's obviously slowing growth, and a lot of problems just geopolitically. So I think that, who knows where that, you see cycles in history play out like this over time. Currencies always get debased. You can look at the Roman times, you can look before that. These kind of cycles always play out. And I think we're kind of in that arranging cycle now. So there's huge risk but also a huge opportunity. And it's just amazing that we live in a world where we have the internet and we can create things like cryptos to kind of take us out of a system that's falling away and then still move into something even better. So that's kind of where I look at it from. I use definitely I use cryptos as kind of a hedge in terms of how I invest. I don't have a lot of traditional investments because
Yep.
I fundamentally believe that all stocks, bonds, property, all these asset classes, they're all riding on the trust of governments and zero interest rates, and fundamentally they can't survive without that. And that is kind of life support that the economy's been on for the last 10 years. I feel that is also coming to an end. So I think we'll really start to see some price discovery, and that's really what is so nice about the crypto markets, is that you do have some price discovery. You are rewarded for your risk. The return is kind of relative to that risk. Where at the fiat world, you have no idea of risk,
Yeah.
because risk is discounted, it's totally hidden. We have no idea what's going on, and people have a lot of trust
Yeah.
because historically, that's how we've lived. But moving forward, obviously the world changes very quick, and I think it's better to look into the future rather than wait for the panic to occur and then try to get out, because then it might not be so easy.
Yeah, definitely prepare yourself for the future. And as you said, the cryptocurrencies are like, it's really good to be getting into them just as like a safe haven. But don't put like all your eggs in one basket. Just as you wouldn't put all your coins, you wouldn't put all your money in one coin. You
Absolutely.
probably shouldn't put all your money in cryptocurrency industry together, right? Because any day, the SEC could come out with some legislation, like they just came out with, there's some news article on how the Dow tokens were illegal securities,
Taxable or something.
a couple days ago, and
Yeah.
it seemed relatively unaffecting the price,
Mm.
but they could put in some legislation that does affect the price,
Mm.
and that news will break, and the prices will, could be affected very quickly. So it's always good to diversify outside of cryptocurrency as well, and just in your everyday life, just don't put your eggs in one basket, because you never know what could happen.
Absolutely. Obviously, it's a super volatile space. I think everyone in my group understands that, so we're not like putting more than we can afford to lose. But in terms of the future, I think we can see the potential. We see the current system has its challenges. Just the last point about governments and how they kind of will affect the situation. Obviously, there will be some pullback in terms of regulation. They will try to get control of the market. Do you think the market's just moving too fast for them? The way I kind of see it is that you have different governments competing for capital almost. So the ones that are more liberal and investor friendly, like Switzerland, Singapore, they're obviously attracting a lot of the companies now. We're launching ICOs there. If America's too burdening, the capital's just going to leave. And that's pretty much,
Yeah.
when the internet came out, America had the advantage because they let it totally unregulated and then just grow organically. And that was huge for the American economy. And now you kind of see with cryptos, the kind of reverse, where America's kind of chasing capital out. Do you see any kind of countries or economies that will benefit from that, or in terms of that trend, how that will play out with regulation?
Yeah, definitely. As you said, if you just let it go and embrace what's happening, embrace the future, then I think that it will it could easily flourish. And you're right, like Switzerland, Singapore, and Southeast Asia specifically,
Mm.
they are, accelerating their fintech industry more than ever. And I think that, if Canada and USA doesn't step it up with their centralized banking and the way that the financial industry works, then they're going to be left in the dust at the bottom of the list.
Mm-hmm.
And it just seems like Asia is just taking a stranglehold on these industries, and like they're doing a lot. And I think that them adapting to the cryptocurrency industry that was built by the people is good for them. So they're going to be way ahead in the future, I would say, for that. And if these Americas don't embrace what we've created, then we can't shut it down. So see you later.
Yeah, absolutely. The money's just going to move, right? You can't stop the capital. There's no capital controls the cryptos. It's almost impossible to control that. So it's kind of interesting, that paradox, that China's seen as this authoritarian government, but yet crypto is being embraced more rapidly over there than in the West, where we're supposed to have democracy and liberty. But people are scared to start up, crypto businesses because they're worried about the regulation of the taxes. So it's very interesting times. The world is changing really quickly. I don't think people can really see where it's going to go.
Yeah, you're right.
Very cool. All right, Ashton, I appreciate your time. Anything last words you want to share, in terms of advice or tips for our members?
Yeah. Now, just take everything with a grain of salt, and make sure that you do research on your coins yourself before you put too much money into them. And if you need tips, obviously you can come to you for advice in your investment group, and your group can watch my YouTube channel, CryptoCoinShow. Make sure that you're getting news on what because I like to cover cryptocurrency news. Plus, I do insights on lower market cap coins and bigger coins, just to give you an overview, try to prepare you to make better decisions in the industry.
Very cool. Yeah, I'll definitely put a link to your channel below. Members can check that out. So my last question is, if you had 2 or 3 people that you think are really at the leading edge of this cryptocurrency, you think I should definitely speak to, who would those people be and why?
Well, I would say a lot of the big guys on Twitter that are super knowledgeable. The thing is that they're so busy working on their projects.
Yeah.
There's no way they'll be able to talk to you. But they do. I like to follow Charlie Lee and Vitalik and Vlad Zamfir and Eric Voorhees and those guys on Twitter, and just try to follow what they're saying. And it'd be nice to get their insights personally. But even myself, I'm just so busy with cryptocurrency that it's hard to communicate. But yeah, just try to follow all the guys and accumulate all your resources. So figure out what people are posting information as soon as it comes out, so you can be the first to know.
Yeah, I think Twitter's good. I don't use Twitter enough myself, but I think it's a good strategy for breaking news, especially following people, in terms of their insights, and is quite useful to see what their take is, because they're obviously at the top of the game, and they can see what's coming as well. So I'll definitely put some links to some of the people you mentioned as well. People can check them out. Ashton, I really appreciate your time again. I'm going to wrap it up here unless you have any other questions or anything else you want to share.
No, thanks for having me, Michael, and it was great.
Cool. All right, just hang on the line. I'm going to end the call, and then we'll just wrap it up. So yeah, guys, we'll see you next week for another show. I hope you enjoyed this one with Ashton, and check the links below. Check out his channel, and we'll be back again next week. Cheers.
Cheers.